The Taxpert MTD Basis period App 2022 has two main functions. First, it can show you at a glance what the calculations will be for your sole trader or partnership clients as the basis periods change with the transitional year next year, 23-24, and the tax year basis coming on stream in 24-25. And it will, of course, include the spreading over 5 years of any of the additional or transitional element of the 23-24 tax year. But this is an important and significant second objective. It enables you to see at a glance the impact of changing accounting date before we get to the Making Tax Digital tax year basis periods. And that could have a very significant impact on cash flow. And contrary to what HMRC is currently encouraging us to do, which is not change to 31st of March until 23-4, in some cases, it will indeed be advantageous to change now. Well, let's have a look at each of those. You can see on the screen, as usual with our calculators, the yellow fields are the input fields. And here I've got current accounting date of 31st of March. And profits going 30,000, 40,000, etc. No overlap relief brought forward on the 31st of March year end. Technically, there'd be 5 days. And then change date. And I've said no at the moment. And with the answer no, if I then scroll down to the output, we've got the basis periods on the old date. Well, as we go from 31st of March to a 5th April, there is a 5-day rather difference, which makes a very slight difference there because I'm doing it to days. But you've basically got 30, 40, 50, 60, etc. And with the new date, we'll have a changed date. It's just the tax year basis. And there's that spread of 192 a year because there is that difference, the transitional element being spread over 5 years. But the interesting part of this will be if I click, well, actually, before I do that, let's just go back and let's imagine if instead of a March year end, you had a 30th of April year end. So let's select that 30th of April year end with that same profit distribution. And we can see there at a glance how the taxable profits are going to change as we go to 23-4. And the 30, 40, 50, well, instead of the next year being 60, the next year is 73 because of the change to the tax year basis. However, there will be a possible spread of the additional amount, and that spread is 13,044 per annum. And that is taken into account in working out what the adjusted assessments are. And of course, you've got workings on the next page, which will show you if you get, by the way, any of those, actually, as I enlarged it, they went away. But there's an auto fit button there, which will make sure that all of the figures are showing. But the workings there show us what happens as we move to the tax year basis. So going back to the main screen, we can, as I say, see at a glance what happens there. We can also see that if we don't change accounting date, there's no difference between what's going on, and that is fine. But if I then change the no to a yes, I'm going to change accounting date. Well, of course, if I stay at 30th of April, which was the old date, there isn't going to be any difference. But counterintuitively, if I were to change date, let's say to 31st of March 22, so when doing the 21-22 tax return, we've got until 31st of Jan 23 to put this into effect. If I decide to change the date in that way, what happens? And this is quite extraordinary. Now, in this case, it's very bad news because, oh, I haven't put in any overlap relief. Well, if it's an April year end, there may be overlap relief, 11 months worth. Let's say the profits were quite low when the overlap relief was created, and we've only got 11,000. So I put that in, but we're still going to have a significant disadvantage here. And what I can see is that if I do change to 31st of March in 2022, then in fact the assessment for the tax year 21-2 will go up by 35,000 odd. It balances out eventually, but wow, you certainly don't want to do that. But it's because of the way the profits are working. Now, if I were to have a different distribution of profit, suppose it was 90,000 in the year to April 20, and let's say 95,000 in the year to April 21, what effect would that have? Well, oh, it's still very bad news by the look of it. Let's put it up to 120,000 in the year to April 20. No, let's drop it in the year to April 22 to 12,000 and then drop it to 15,000. I've no idea what will happen here, but you can see how you can play around with it. And in fact, there, the difference falls in 23-24. So you can see exactly what's going on. But let me just go back to, I'll just get rid of those changes. And in fact, I'll go back to that 30th of April. No, I won't. I want to go back to that 31st of March, the original year end. And if I need to change that here, let's suppose originally we've got a 31st of March year end. You wouldn't, would you, think of changing to 30th of April 22? Why would you want to do that? Well, if I do that, I haven't clicked the yes on change of date. So let's go back there, click that to yes. Then, well, that's a totally different outcome. Almost unbelievable. If you've got a March year end and your profits were going up 30, 40, 50, 60, 70, 80, 90,000, etc., look at the difference. The difference column here shows me that for 21-22, the assessment would be 9,000 lower if I change date. For 22-23, it'll be 9,000 lower. For 23-4, it'll be 3,500 lower. But then it starts to be 5,600 higher in each of the next 4 years. So all of that balances out effectively. But that is a staggering result. And that shows us why we should think about changing accounting date, even if we're looking at an existing March year end. Let me do just one other piece of trickery here. Let's suppose that you've got, as my own partnership has, a December year end, and we're thinking, actually, let's not change accounting date. Let's have the same accounting date. Again, if you see those hash symbols, click auto fit, and the spreadsheet will then extend the column widths to get the right presentation. Now, let's bring in overlap profits again of a relatively low amount. Let's say it was 12,000, and let's see what we've got here. We're not changing accounting date, but what I want to look at is the 5-year spread. So, and the old data, the new data are the same here, so these two columns will be the same. But what we've got, because of the way the transitional calculation works, is 6,000 odd being spread over 5 years, but you are able to select a higher figure. So let's suppose that in 23-4, we decide for whatever reason to bring in 2,500 of the transitional spread. When I click return, that will automatically recalculate the spread for the remaining 4 years over which it's spread. And then maybe a couple of years later, we decide to go for 1,600. Well, the balance there will be 300. So you can see how you're able to manipulate. The reason those red figures came up is because I haven't changed accounting date, but it doesn't automatically flow through there. If I do that, that gets rid of them. But you can automatically manipulate the spread figure to get the figure you want. So a lot is built into all of this. And as usual with my calculators, we've got the full workings. Click auto fit again to see everything, and you can see how it's all calculated. But I hope you'll find that very useful for clients as we head towards that transitional year 23-4 and consider changing accounting dates before then, contrary to what HMRC are themselves advising.